Please remember that nothing we say here should be taken as personal advice. The conversation is for entertainment purposes only. If you have questions about your financial situation, please talk to a licensed financial advisor. All right, welcome to another episode of Future Money, where we talk about the technologies of the future
that will make us money.
Good to see you again, Hatem.
Yeah, a bit of a somber tone.
Yeah. So, we want to start off this podcast with a sort of somber, sad tone, given what's going on in Israel.
I know you're Israeli.
Yeah, so it's been a really hard couple weeks for us, for family, friends, kind of what's going on there. As you know, obviously, I was there literally a month before this whole thing went down. For 3 weeks, I was in Tel Aviv in Israel, and it was the most vibrant, fun, loving, packed, excited environment I was in.
Right.
And I go very often to Israel, and other than my extended family, everybody lives there. And of course, a month later, this horrific attack from Hamas happens, and 1,400 Israelis were massacred.
Awful.
In the most brutal fashion in history, basically the most brutal terror attack in history, and harkens back to the Holocaust to find atrocities in this way. And it's very personal for us. It's very, obviously, for the Jewish people in general in the state of Israel. This is a very harrowing moment of standing up against those who seek to destroy Israel.
I think the brutality of the events are it's really tough to fathom them. You see I've seen a lot of terrorists from going back to September 11, right? And before that, and it's just to see that much evil that exists in this world, even today, it's really kind of crazy.
It's women, it's children, it's elderly people just brutally murdered, and frankly, Hamas is one of the worst organizations on the planet, and I think that's very important. And I want to state for the record that I am not against Palestinians in any way. In fact, we have people in our firm who identify as Palestinian, as Israeli. We have Lebanese. We have you're from Tunisia. We're a very we really appreciate everybody's culture in this firm. Right. So this is not a Palestinian issue. This is a Hamas issue.
100%.
And unfortunately, the Palestinian people are going to suffer immensely because of this.
I'm not a foreign policy expert by no means, but it's not hard to see that Hamas has been terrorizing Palestinians for many years, and now what they've done is just going to bring more pain, and it really is just unfortunate to see this happening again. It's been really tough, and so as I've been fundraising for Israel, trying to help people, whether it's their families or the military or whoever it is, to ultimately kind of try to get past this tragic event. And I think it begs to say that this is not an Israel problem. This is a problem for governments like the one here. And I think Biden has obviously taken that to heart. And, Hezbollah, which is basically, another equivalent of Hamas, is threatening Israel from the north. And this is, we kind of wanted to get into a discussion of what happens during times of war and geopolitical upheaval. The impacts on the markets and how that kind of, how do we see that and how that happened in history. But also the brutality of what happened has really actually set us back many years, because for the first time the Arab world and the Israel were trying to come together. Right? And this has really kind of set us back, and
I'm sure Iran was behind that. Israel was about to pen a deal with Saudi Arabia, an historic deal, which is now gone. And now you have regional conflict, and with the possibility of a broader conflict on the horizon. So this is not a good scenario in any capacity. Again, if you look at it, it's 1,400 people. If you look at it on a ratio, on a sort of a per capita basis, this is like a 20 or 30x 9/11 for Israel.
Sure, no, it's massive. It's massive, and obviously our prayers and really go to the families of those who are lost. And there's also 150 plus hostages still there.
Yeah,
right?
yeah.
So,
American hostages, Israeli hostages,
Correct.
hostages from 40 countries.
Yeah.
There was a couple released yesterday.
Sure.
You watched the video, which I did. Unfortunately, as an Israeli, I feel the need to have to watch these horrific videos constantly to feel the pain that they're in.
Uh-huh.
And again, I know the Palestinian people are also going through terrible things right now, and I feel for everyone in a humanitarian crisis, because unfortunately Hamas doesn't care.
Oh yeah,
they will use them as shields. They will hide in mosques and in schools, and
they're cowards.
That's and so my heart does go out to the Palestinian people who are innocent in this scenario as well. But unfortunately, there's no way around conflict at this point, given such a huge attack.
Yeah.
But with that said, let's kind of focus more on what happens during sort of period spiking in geopolitical tensions.
So there is no way to sugarcoat it, right? Conflicts like these are just not good for the stock market.
Yeah.
Because a lot of the economy, the market is really about expectations, about things getting better, about
sentiment,
right? And when you see blood and conflict like this, it just doesn't help them. And we've seen that, and at least for the short term, right?
Yeah, exactly.
We've seen that happen the last 3-4 weeks since this thing kind of came up.
Yeah.
Markets have been all over the place, or volatility has spiked as a result, right?
Yeah.
You also see some sectors that will kind of get hurt, right? Like airlines, for example.
Yeah.
First thing that goes down, right?
Yeah.
You also see move to safety, right? So you've seen like the yield spiked because people were moving in towards more kind of fixed income and things are safer, right?
Yeah, and then we had to march back up in rates. We had to sort of push down in the beginning. I think oil is a big thing, right? Yeah. Obviously, specifically because it's the Middle East in general, right? A possible, incursion from Iran and anything like that, and a broader conflict does put sort of that into question. So I think, oil prices, and obviously oil prices are kind of a tax. The higher oil prices is kind of a tax on the economy, right?
Right.
Overall. So it's not great. Usually, initially, it's not great. And obviously, the sort of big overlying factor is how big is the conflict?
Right.
How long does it go on?
How prolonged it is,
How many countries are involved?
Yep.
What's the ultimate exit plan? And so, I kind of looked at like World War II, for example, which is obviously the most extreme example of a global conflict, to things like the Gulf War, the first and the second. And it's interesting if you look at kind of what happened even in World War II, after the market, obviously, as Germany starts to invade, things go down, uncertainties, people are scared, but then things are okay when Pearl Harbor happens in the U.S., the market has a really hard time with that.
Yep.
And then even as the U.S. gets into the war, the market starts to recover.
Sure.
When we weren't winning yet in any capacity, the market recovers, and then as it became clear that the Allies were kind of doing better, the market kind of takes off, and then when obviously the big thing is the post-war boom in general.
Yeah, the post-war was probably the best stock market we've seen in history.
Correct.
From the 45 to 65 or 70, right?
I think technically the 80s to the 90s were the best, but I think economic expansion, not just the markets, in that period was the crazy, right? You had the baby boom.
Sure.
And obviously, again, that's a very broad, very big conflict with tens of millions of people involved.
Sure. I think more corollary maybe the September 11. We had the tech bubble, right? Burst into 2000, March 2000, and unfortunately September 11 happened as we were recovering. That really sent us back into kind of a prolonged drawdown, right? So again, conflicts are not good in the short term. Long term, things usually do work themselves out.
Things work. And again, if this stays an Israeli-Palestinian conflict, this is par for the course. I mean, obviously this is a horrific and a more extreme version, but conflict in the Middle East has been there for, I'm going to say for decades, but we can go for millennia if we really want to. But some of the things that happen during wartime scenarios is actually you get a technology boom
100%.
also. as military technologies have to evolve to sort of deal with threats. And we know that a lot of times the military develops a technology that ultimately is, transferred to the private sector and expanded.
Yeah. I mean, you can think of the nuclear bomb has created like the nuclear energy boom, right? Or you can think of the GPS that was developed by the military to get us to the internet, right?
So the Gulf War and the internet, and it's I'm a history nerd, so I was like listening to this other podcast where they were talking about basically in World War I, the military, like they were sort of training for wars of the 1800s, but the advancement in military technology was so fast to them at that time that basically they had planes and stuff like that. A plane that you flew a year before was basically not even relevant the next year.
Yeah.
And that's the stuff that happens. And obviously, again, wars are terrible, but like anything, there is light, there is a silver lining at some point that hopefully will come out of this, and hopefully there'll be more stability and more peace, and that leads to a post-war boom. Hopefully.
Yeah. So that's again, we hope resolution is closer than not, but it is just complicated.
Yeah. So let's move on to a slightly less depressing topic.
Nonetheless depressing.
We're gonna move from very depressing to not depressing and exciting at the end, and stay all the way through because you're gonna get to the more fun stuff.
And it's about government debt. A conversation has been coming up a lot around the office, around the economy. Everyone is talking about how the U.S. has $33 trillion in debt, and how is that not sustainable? So we want to. Do you agree?
It's not great. I mean,
so with interest rates going up, right? The U.S. government borrows money to basically fund its own operations, right?
Sure.
So think of you being a household, right? And you bring in $100,000 a year, but you spend, I don't know, $150,000 every year, right?
Yeah.
And you have to borrow $50,000 every year. Over time, that's just not sustainable. And we're financial planners. We talk to clients all the time.
Yeah.
When we do a budget and we see a deficit, that's just something that we have to deal with right away, right?
Yeah. Do you think we can, sell ourselves out to be like the U.S. government's financial advisors? I feel like, I don't know if that'll be a good thing or bad.
Who do you talk to?
Biden? I don't know.
The GOP, the
Jay Powell.
I don't know. They both suck. So.
Jay Powell will just say raise interest rates.
Yeah.
That's all.
So interest rates, again, so talking about interest rates, right?
Yeah.
Interest rates have gone up. The 10-year yield just crossed 5% yesterday, pulled right back. But that means that the debt that we've issued, that we were paying 2% on 2 years ago, now we have to pay 5%, right?
There's literally debt that came out in 2020 that is 0.125.
Amazing,
you've
right?
seen those when you buy, we look at the treasury bonds to buy. And
in hindsight, I think
we talked about this. Why didn't they issue 100-year bonds?
I know. I think because Trump came up with that idea, and it was just
Really, I didn't realize. I thought I came up with that idea. So my bad.
Yeah, I think it was Trump's idea. In hindsight, it was actually pretty smart.
No, in reality, who was it? Was it Argentina or somebody who did the 100-year bonds?
Switzerland did one.
Yeah, but a much more stable economy than Argentina.
I don't think Argentina has a 100-year bond. Maybe they did.
Somebody did it, but it was like a laughable, who would buy a 100-year bond from Argentina with 30% inflation. So now we have 5% interest rates.
Yeah, so our debt service, or the interest that we pay on our debt every year, is over $800 billion.
Right. We're probably all feeling that now. You have a home equity line of credit. You were paying $1,000 a month on it, and now you're paying $1,300 a month on it,
or more,
or what?
More. Yeah.
Actually, in reality, it's probably $2,000 a month.
Listen, you're doubling your cost of debt goes from 2% to 5%. You're basically you're doubling it or more,
1.5 times.
Yeah, exactly. So I think that's really the issue that we have, and it's not sustainable if we keep adding to it, right?
Yeah.
Because now that debt service, or basically the interest that goes to pay off this debt, or just to pay off the interest, is just becoming our biggest expense to government, right?
And now we have more than 100% of GDP is debt, right? So
127%
of our debt, of our GDP is now our debt, which is not great.
So what happens here? What's the solution?
I mean, what do we tell our clients is the solution when their debts are too high?
Well, you got to either make more money.
Okay.
Right?
We don't love that option. You know what that means.
You got to cut your spending.
More taxes.
Yeah. So more taxes, right? Make more money for the government is more taxes, right?
More taxes. And in reality, again, this is not federal, but in state, if you live in California, you are paying a crap ton of taxes. And
I'm not sure where it's going.
The ability, I don't know where it's going either, between how much money California brings in from all the industries as well as from how they tax people. Like at some point, there's like a limit to how much you could tax people before they like lose it.
Sure. And we're seeing an exodus from California because of those reasons.
Yeah. And again, not to go back to history again, but part of the end of the Roman empires. So in Rome, they used to basically like tax collectors were like, it was kind of like the mafia. You basically bid for the job, and then once you got the job, you could literally tax whatever you wanted. and at the fall of the Roman Empire, a lot of people were like relieved, to get under this crushing oppression from tax collectors.
100%, yeah.
And so I hope we don't turn into that because but yeah, for sure you're seeing migration to Texas, to Florida, to the states that are not taxing us. So cut your spending, right?
Cut your spending. So
where can we spend? The crappy part about this also is like Social Security, Medicare, like that's like 2/3 of the government spending.
100%, which both Democrats and Republicans do not want to touch because
who's going to elect you?
It's basically you don't want to hurt seniors, you don't want to hurt. It's really the two most important programs for the government, right?
Yeah, totally.
But the reality is, and France went through this, right? You got to raise the retirement age because Social Security is not going to be.
Yeah, how'd that go?
I mean, it was a little.
They burned down Paris, basically.
Yeah, for a few weeks.
For like a few weeks, they burned parts of Paris.
But they passed it. And then, did they get it? And it was passed. I think tough decisions have to be made, and unfortunately, our politicians are not willing to make those tough decisions. And that's really kind of where we are now. I don't think the problem is tomorrow. The U.S. government is still the most important government in the world. We have the biggest economy. Our dollar, our currency, is effectively the currency of the world, right? So that, and also our debt, despite it being a lot, it's still the number one investment for every other government, right? So I think the minute that we lose that, where other governments don't want to buy our debt, then we're in trouble.
That's the problem. And we've started to see it with China, right? But then the other side is like China's trying to be its own thing, but who would use the yuan as the reserve currency? Who would trust China?
I mean, I think having a system that is reliable, institutions that you can rely on, a legal system that works, businesses that can understand property rights and so forth is really kind of why the U.S. is the number one place to go. Yeah.
That being said, I don't know where they're cutting spending in the near future. They're not going to cut the military, especially now what's going on.
No, I mean we're spending a lot more money on military.
So this stat is that the U.S. spends more money on the military than the next 16 countries combined.
Yeah, I mean we probably need a lot more time to talk about that stuff. Because frankly, there's a lot of waste in our military, and if we
a lot of waste in all of government. I think that's part of being a developed first world society. So there's always this thing, right? Is like, as societies become more developed, they become more comfortable. There's more social programs. There's more waste versus like the lean, mean, right? We see it in companies all the time also, right? It's like the big bloated companies get fat and lazy. And then, the smaller, leaner, nimble companies come in and eat their lunch.
So what, to kind of sum this up, like, what would we tell someone who's like, hey, I don't really like the U.S. debt because of how big it's become, and I don't want to buy U.S. government debt?
It's still, it's still, again, the safest investment you can make out there. It's backed by the federal government, and you also want to buy assets. You want to own stocks. You want to own companies, right? These are the value of real companies. And the U.S. government's like defaulting on their debt for real. It's just not going to happen,
right?
Because Like it's just not. So to spend time worrying about that stuff, it's just not. Now,
and it's also so important to understand we have a very robust economy.
Correct.
That is not just government driven, right?
Right, exactly.
You know? And this is why people still want to be here, right?
Exactly.
You know, our prowess is our ability to innovate, our ability to really create more value, more productivity through our companies and innovation systems, right?
And that's the big one. I think what is constantly underestimated by the world and by people in this country, because I feel like people are naturally pessimistic in general when it comes to this stuff. that innovation and ingenuity in the U.S. is unlike anywhere else in the world.
Yeah.
And part of that is simply the system is set up, right? Capitalism
the incentives
is set up, right? And I've had this conversation, right? Like healthcare is a lightning rod for a lot of people because, you go to doctors, should you be, you have this medication, it's really expensive. Right. When you go to other countries, it's not as expensive. It sucks. It's not a good look, but I would also say sometimes I say, well, would those technologies, would those biotech or pharmaceutical companies have developed them, and if the financial incentive wasn't there for them?
And that's kind of how capitalism works, right?
Yeah.
Like if you have the incentives towards innovation, no red tape, right? Like here in the US, you can start a company real fast. You can find money to invest in it, and really being able to kind of put that investment towards trying to create some massive value, right?
Yeah,
and everyone can benefit from it. So your investors
Correct.
can come in. You can't do that in Europe. You can't do that in anywhere in the world.
Yeah.
And they're trying to kind of emulate our system, but it's just not there.
It's one of the reasons that the stock market in the U.S. has constantly outperformed, especially over the last 15 years, because technology and innovation is just, we just have something here that they don't have. And, China for a flash kind of had it, and then you saw what happens when you have a totalitarian government that controls everything.
Yeah.
So with that said, I think it's a perfect segue to talk about one of the ways that we can get out of this is through innovation, through technology, right? Through boosting our revenue as a country, right? And that is AI and tech. I think, I can't remember who did this. Was it Global X or one of the companies said that basically over the next decade, AI has the ability to increase our GDP.
Goldman Sachs.
About
Goldman 1%.
Sachs. About 1% of the GDP. And that's
massive.
That's $3 trillion.
Yeah.
Right?
Yeah. If you think about innovation, right? Like the top 5-6 companies in America are worth $15 trillion or so, right? Crazy, right? That's half of the U.S. GDP, right?
Yeah.
So when you talk about innovation, that's exactly what we're talking about. Like how can you create more value? How create more companies? And I think AI, as you said, is probably the next wave.
Yeah. As long as they don't kill us first, then we're good.
Yeah. I mean, listen, we're afraid of,
I'm not that afraid of it, to be honest.
I think it's okay to understand the
risks.
The risks, right?
Sure.
Like, social media. I think today we had a bunch of states sue Facebook for all the harm they've done to kids, right?
I
mean, technology will always have some negatives.
For sure. But I don't really know what the grounds that you sue Facebook on is you made the platform too fun for my kids and they go on it too much.
100%.
I don't like Facebook. I want to make that clear. I don't like social media.
Kids get addicted.
The whole addiction. We have an addiction to the word addiction in America. Everything's an addiction, whether it's social media or gaming or media or we're not addicted to everything. There's a very distinct definition of addiction. Yeah. And if you don't meet those criteria, stop saying that we're addicted to everything. Yeah. So there are ways to control how much your child sees social media. People have now.
You're gonna lose that argument right away, but it's
what argument? I want to be clear. I hate social media personally, but. And my child asks me about social media all the time, and I say, no. When you are 15, you can decide how much social media you're using.
How old is Micah now?
He's 9 right now.
He's 9, so he's too. Yeah. I mean,
there's a lot of kids who are on it already. Does he have fun? No.
Yeah. See, that's.
But he does he games. He plays it's social media in that sense while he plays video games. Mm-hmm. Obviously, I limit it to who he can talk to and all that kind of stuff. So, regardless, I think we're digressing here.
Sure.
I just this technologies will always have a negative, and that's anything. That's right. When we invented the car, nobody thought about the fact that we were going to pollute the entire world. Right? Pollution wasn't even a thought process.
100%. Yeah.
And so, of course, AI has downsides. Everything has a downside.
So let's talk about let's turn into some positive, right? This is future money. This is about making money, right?
AI is great. I love it.
Yeah, the opportunity has been there. Gerber Kawasaki's top holding right now is an AI play, is NVIDIA. And everyone is talking about being a bubble, right? And then I think we wanted to talk a little bit about what a bubble is and kind of the cycle of innovation, how it works, and maybe share some insights on that.
We use the word bubble like we use the word addiction also, by the way. I want to add that because I've heard the word bubble in my career literally like I think like 7 or 8 different times, and granted, some of them have been real.
I mean, I think what we need to kind of talk about here is that bubbles are actually okay.
They're inevitable.
Yeah. They kind of have to exist in order for the technology or innovation to happen, right? When the internet happened, and what happens with bubbles is a lot of investment comes into it.
Correct.
And a lot of it is not going to pan out.
Correct.
But the one that does, it's really what's going to create tremendous value, right?
Absolutely. So what is an actual bubble? I think obviously there's no exact dictionary definition of a bubble, and I think everybody knows the story of the tulips. Right, in the 1600s, and like that's a quintessential bubble. That is an item that has no utility, and you're just like, it's a flower, and you're like, well, today it's worth 4 times as much as it was last week, and that's a quintessential bubble. The stock. You
could argue crypto is that.
Well, so you're kind of getting ahead of me here, but I wouldn't. I think of all the times people have asked me about bubbles, I would say that crypto is the one that has the ability. Obviously, in the .com era, we had bubble. We had an overvaluation of everything, and I think that's how in the stock market, at least, we can reference bubble or bubblicious kind of behavior, right? So. Again, to give everyone a point of reference, the stock market trades on a price to earnings ratio. Historically, it's somewhere between 16 and 18.
Correct.
Now
it's up to 25, 20.
And the peak of the S&P reached 32 in 2000, and the NASDAQ, the tech heavy, was over 100. Right? So that's more than 3 times the valuation of today.
And what it is just the price to earnings, right?
Correct.
Because basically, how much are you willing to pay for each dollar of earning, basically? It's from 16 times to up to 30 times at its highest.
I mean, you could get down to like in the really bad times, like in the 70s, we got down to like 8 Ps, and that's a bleak outlook for your like economy. But in general, like again, the NASDAQ would have to be 3 times higher than it is today, even almost 4, for us to be where we were in 2000.
So I think what we're trying to say here is we are in bubblish territory.
We're in higher valuation markets,
right?
But maybe not a bubble,
right?
And I think if you're going to buy innovation, if you're going to buy technology and future, you're never going to get undervalued company. Like you're never going to be like, oh, this company is crazy cheap, like,
but it's growing,
at 50%, and you're like, it's not going to trade at the same valuations as Campbell Soup, right? Which I think is funny because some of the argument would be that Campbell Soup is overvalued. So you're always going to be at a higher valuation because you're betting on future growth, right?
100%.
Higher risk, higher reward.
And also it's inevitably that you're gonna make some good calls and bad calls, right? Some companies, Cisco was the quintessential company of the 2000, right? They made the 90s, right? They made the switches for the internet. Literally, the reason why the internet works is because of them. And that company was trading at 100 times earnings at some point. And then when the bubble burst, even though people thought it was like the main company, still was down 90%.
Even Microsoft was down like 60%, and that was like best in class. You know what I mean? Amazon was still a nascent company. Like they were still fairly young. They were just selling books still, I think. But I mean, all these companies, and we're at least old enough to remember the .com. I was in college.
But that kind of, and this is what happens, right? Valuation gets stretched, and then the pessimism gets in when the bubble bursts and everything gets sold off hard. Had you bought Microsoft maybe Microsoft is the best example, Amazon or, you know, some of these companies, when they were down 90%, then you would have done really well.
You would have made like tens of thousands of percent.
Yeah, and exactly that. So I think it's important to understand that concept.
And we had a bubble recently. I mean, obviously we can use crypto as the quintessential example, but I think that the sort of 2021 everything bubble, like everything was overvalued, everything, like you had nonsensical valuations for private, especially private companies or companies that went public that year.
And we're still paying that price, right? We're seeing down rounds right now happening.
They're seeing down rounds everywhere. Stocks that went IPO in 2021 are still down 50, 60, 70%.
Of every IPO from last year is still down.
2021, because last year there was like none.
2 years. That's right.
No, it's true, and then significantly down, not just like a little bit down. Right, and I don't have the numbers offhand, but I would venture to say that most of them are probably down half or more.
How about those SPACs?
Yeah, remember what we talked about? I go, this is a great idea. Let's just take a company public with no real reason,
no real revenue.
We don't really have any. We're not even sure how the SPAC works exactly. Like the merger of some weird company. Not a great look. But I do think I personally think, right. So, you know, people ask that, tell me the next NVIDIA. And I'm like, wonderful. If I had the next NVIDIA, I would love to tell you. But obviously we don't know. And NVIDIAs don't come along every day. But I personally believe that this is like the NVIDIA, you know, they use the iPhone moment, like Jensen Huang calls it the iPhone moment. I look at this almost like I call it the Windows 95 moment. I think ChatGPT was the Windows 95 moment.
We're finally PCs.
Exactly. Before 1995, people had computers. Some people had computers. But Windows 95.
Commodore 64.
You had you're aging yourself. No, you're aging yourself. I played on those too. I didn't have one, but when Windows 95 came out, it truly became an item for everybody. And I remember very vividly, like my friend got it first. And I remember like we were doing a project for school and like doing all the different fonts on the keyboard and like looking up. They had an Encyclopedia Encarta.
I mean, the graphic.
I mean, at the time they were amazing. Today they're trash. But it was like they had, you know, we used to look things up in the library, but they had like Encyclopedia online, and I was like astounded. And I kind of feel back then I was 13. Today I'm 41. I kind of feel that way about ChatGPT and Bard as I felt about Windows 95. Like, oh my God, I could do all this stuff that took me forever before. In a snap now.
So I think what you're talking about is not the excitement of this new technology. We haven't seen what can be done. We haven't seen all the applications, you know. We're using a lot of this AI tools now to really kind of streamline a lot of the processes that we do in-house. But this is going to be across the economy.
For sure.
Productivity is going to be created. So you just got to be patient and see this play itself out, you know. So right now, maybe NVIDIA is the biggest winner for obvious reasons, because everyone needs to buy these chips. But ultimately,
it's like Intel, right? Intel in the 90s. 100%. They were one of the best companies in the world at the time. Because why? Because everybody needed chips in their computers.
100%.
But it's also a cautionary tale. Because where's Intel now? They're still here, but
they missed mobile, they missed GPU, they missed a lot.
That's the whole new company versus old company kind of thing. And I think for everybody who's and I love NVIDIA, for the rah NVIDIA people, it's a cautionary tale, because at some point there are new players that come in, and if you don't innovate and if you don't stay ahead of the game, they will eat your lunch.
100%.
That's exactly what NVIDIA did to Intel. And who knew what NVIDIA was when we talked about NVIDIA, Hatem, in 2016?
17, 16.
The only people who knew, it was 2016. It was March of 2016. I remember it like it was yesterday. The only people who knew what NVIDIA was were hardcore computer gamers.
That's exactly
it. And not even like mild gamers. And so there's all these new innovations, and when Jensen calls it the iPhone moment, I think that's a great analogy also, because when the iPhone came out, it was a phone and it used the internet, and that was cool.
And it actually wasn't even that good of a phone.
It wasn't even that good of a phone. But what happened with the advent of the iPhone?
Uber.
All these new technologies sprung. You had the App Store, right? Which I think is the main innovation that really happens
The app
with
economy,
mobile, right?
The app economy, right?
And then like trillions of dollars get thrown into this new digital economy, right? Like you have all these apps and all these things that are developed, and social media wouldn't happen without that, and like Netflix wouldn't happen without, like none of these things happen without the advent of iPhone, and so I think we're at that moment where we're like, we have the platform, we started it,
right,
and now it remains to be seen. Now it's a free for all, and we'll see what comes out of it.
Yeah, so it's exciting. I think to kind of wrap this up is, it's nice to be an optimist, right? Like, you can always be skeptical. You can always say, hey, listen, and actually when you're skeptical, we say this all the time, skeptics sound smart, optimists make money, right? We're not going to be right all the time, but I think you have to understand that technology like this is not going to be a smooth ride, but eventually the opportunity is going to be huge.
Yeah,
right?
You're not going to you can't invest for growth and for big money if you don't take any risk. It just doesn't work.
100%.
And a lot of people are not comfortable with that, and that's fine. Yeah. Like, you shouldn't do it if you're not comfortable with it.
Yeah, and that's okay. I mean, you can buy bonds, and you can make a ton of money right now buying bonds. With that being said,
buy a ton, 5%.
With that being said, I think we'll wrap this up by talking a little bit about expectations, right?
Yeah.
Like, I think one of the things that we see, or at least try to help our clients and people with who invest behaviorally, how to manage your own expectations, right? And you spoke about bubbles, spoke about SPACs and so forth, right? If you go back to 2021 valuations, right? A lot of companies, the Shopifys of the world, the Oktas, a lot of these companies, high flyers, the Redfins, you know, that had, tremendous opportunities or growth prospects that were trading at insane valuations and now came back 89%, right?
It's kind of crazy.
And when you talk to people, right, it's like, hey, well, it's going to come back there. Right?
Yeah. Yeah, probably not, honestly, or maybe in a very long time.
Yeah.
So it is important to manage expectations. It's obviously important to not have all your eggs in one basket. Not even in the, this podcast is called Future Money, but that doesn't mean that all of your money should be invested in tech companies, because they all go down together. You learn that, just different varying degrees when things turn against you, when interest rates rise, when market sentiment changes, when conflict happens, everything changes. The important thing is obviously to be something diversified, something you're comfortable with.
Right.
Keep to the tenants, dollar cost average. If you're buying good investments, I spent all of last year buying Tesla, Nvidia, Apple, Microsoft. They got hammered last year. But these are great companies. Right. So, or you buy the market or whatever, and stay the course. We say the cheesy line all the time. It's not about timing the market; it's how much time you spend in the market. Right. So I think expectations are really important. And when we talk to our clients, we talk about, people, I want huge growth, 20%, this and that. Well, okay, what happens if your portfolio went down 50%? Because that's possible given this.
Yeah.
Oh, well, that would be terrible. Yeah. Okay, well, so then we need to adjust your expectation here.
100%.
Right.
So with that being said, I think definitely a lot of anxiety that is really driving the negative sentiment around markets, However, the picture is looking a little bit better going forward, right?
Yeah.
And it's important that people really understand that these macro things drive the micro, but also try to see through the fog and really kind of focus on the long term.
And remember that the news is inherently skewed negative.
Totally.
Right? Yeah. Because, the headline, guy makes a good amount of money on his tech stocks and sits at home and enjoys dollar cost averages and sits at home and enjoys an iced tea with his family and retires is not a great headline.
No, it's not.
But bombings are a big headline to get people to click things. Yeah. So the old saying in news is, if it bleeds, it leads.
Yeah.
So keep that in mind as you're trying to wade through the pessimism of media, be it social or traditional. Right. Optimists make money, as you said. Optimists just have a good life in general, and I always coin myself a realistic optimist.
Yeah, that's a good one.
I'm not a person who's just blindly optimistic about everything.
You don't want to.
No, you gotta be realistic of what the expectations are, but then try to see the best in things and see how you can move forward and what could be better. How can we make things better from here?
Yeah.
Right. So I think that's we started with a message of, unfortunately, despair, and I think leaving with a message of hope.
100%
is try to see through the negativity. Try to appreciate everything we have. keep your eye on the prize for the long run.
I think to your point, the world has never been in a better place. There's a lot less people dying from hunger. There's a lot,
correct.
And as bad as the news are and as tough as it is for some people who are going through some really tough times right now.
Yes, absolutely.
I think in aggregate, humanity is a lot better off today than he was 20 years ago, 50 years ago.
And to quote this, Dan Carlin, who's this history podcaster who I love so much, he always equates history to like the stock market. Right? Oh, it's not a straight line. There's all-time highs and there's pullbacks and there's bear markets in humanity.
A good way of thinking about it.
Yeah, and right now we're in a little bit of a bear market for humanity now.
Yeah.
But we'll bounce back, and just like the market, we'll march higher over time.
Well, we'll close out with that. Yeah. Love you, bro.
Love you too, man.
Stay strong.
Thanks.
And hopefully we see better times ahead.
Cheers.